Let's talk more about that and the overall markets with Brian Belski, Chief Investment Strategist at BMO Capital Markets. I could have pointed out the same chart a year ago, Brian, and it wouldn't have mattered. They continue to go up. The market continues to go up. Are you worried that that is just too much in too few names, or does it matter at all?
Thanks for having us, Brian. No, we're not worried because we think the fundamentals of those companies are very, very strong. You know, it's really random, but excessively interesting as well that the 5 stocks that you listed on your list there right before you went to that really cool chart that Jim put out, and we put out a similar chart as well, and I think it's very important that people see that this has happened before, and it wasn't just tech. It was actually the conglomerates in the 1960s that 4 out of the 5 stocks that you listed actually were not tech stocks. One was a consumer discretionary stock, Amazon, Facebook, Google, and Netflix are communication services stocks, not to be technical or anything like that. But I do think that what clients are really losing face with, and from a perspective side, is that these stocks were strong before COVID, as you said a year ago. They were strong during COVID, and they're going to be strong after COVID. And that really has to do with earnings, cash flow, company management, longer-term secular themes. And so we're still overweight the both communication services sector and the technology sector with respect to our U.S. strategy work.
Yeah, I mean, trying to explain it, over a couple of beers in Wisconsin over this past weekend and trying to, talk about all the ETFs and how there's, they run the show for everybody. And everybody you talk to, sort of non-professional, says, wow, that sounds really risky. It doesn't sound like, and you are a professional, it doesn't sound like you think it is risky.
No, we don't think it's risky. And I think that what's more risky are buying assets just for the sake of buying assets. For instance, the ETF space. I'm going to buy an ETF because it's easy to buy or it's cheap to buy. You get what you pay for. And these are some of the companies that are the strongest in the world. Now, there's no doubt that there's speculation in some tech areas, but the way that we're looking at tech, there are pockets of growth at a reasonable price, pockets of value, and pockets of growth. And I still think that that's the way you should be looking at technology. We looked at technology this way for several years. So we're talking about an area, a sector that has its phalanges in every little part of the market and of the world. You think about how strong and a strong part of technology has been to healthcare, Brian, and how fast we're trying to get a serum out to help us and to fight COVID, let alone trace people, and all of that is technology. And so from the vaccine perspective, it's going to be very, very important from a healthcare side. So technology is even more important, we think, to the market in the world than it was in 2000, which, of course, many people like to go compare to in terms of the quote-unquote bubble standards in terms of valuation. Sure. And we're not seeing that.
And that was, obviously 20 years ago. Listen, you could argue, Brian, every company is a technology company. Whatever they make, technology sort of powers the back end. Let me ask you that. Let me flip it. As opposed to a risk, is it a missed opportunity? Are there a lot of really great companies out there that we're not talking about, that investors aren't talking about because they're not named Apple, Microsoft, or Netflix? There's got to be maybe the next Netflix or the next Starbucks somewhere in there. Maybe.
Well, the greatest thing about our country is we've always tend to come back from these types of events, meaning whether or not it's recession or natural disaster or this whole COVID coronavirus situation, and from despair comes hope, and we always see new leadership in the technology area just because of the cash and just because of the innovation. And you haven't talked about stocks on your airways this morning called PayPal or Visa or MasterCard, which are major themes with respect to the mobile society and not wanting to pay cash anymore. I think those are major themes. You haven't said Microsoft. I mean, Microsoft was part of the Mafang type structure, but think about how Microsoft has massively restructured themselves in the last 20 years. Apple in itself, again, from a cash perspective, is going to continue to spur growth in that area.